Hi guys, welcome back to the stream. Our channel motto is learn anything, learn everything, learn at any time, learn at anywhere and everywhere. Be productive, be disciplined. That will make you more money, more peace. That will give you everything. So be productive and be disciplined and be consistent. Let me check that my live is going good or not. Live is perfectly alright. Shall we start with this video? Nikhil Kamath interviewed Elon Musk recently. Let's see what's in that video.
Our audience is largely wannabe entrepreneurs in India. And I feel like all of us have so much to learn from you because you've done it so many times over in so many different domains.
Yeah.
So we will speak to them today, and I will try and center all my questions in that direction so they can take advantage of this conversation and maybe take a chance and build something. You want a coffee?
Sure, why not? Okay, I'm going to talk you. Sure, why not? Okay. Go on.
I hope we are.
Okay, good. Sure.
Inga,
May I trouble you for a coffee?
can we get another coffee?
Cappuccino, I guess? No.
Are you a coffee drinker, Inga?
Yeah. Right. Yeah, I have coffee once, usually in the mornings, you know.
One a day kind of thing?
Yeah, pretty much.
You want to wait for it?
No, I'm good.
The first thing I must say is you're a lot bigger and bulkier, muscular than I would have thought you are.
I'll stop you if it makes me fun.
Really? Seriously?
Yeah, I mean, look, on the internet I'm small, you know.
You're essentially... What percentage of internet
Yeah.
is spent on Twitter? Is there a number to it? On X?
Well, so we have like about 600 million monthly users. Well, although it can spike up if there's some major event in the world, it can get up to, I don't know, 800 million or a billion if there's some major event in the world. So there's, I don't know, 250 to 300 million per week type of thing. It's a pretty decent number, and it tends to be readers, you know, people that read words. You know, so.
Do you think that'll change?
Yeah, I mean, there's certainly a lot of video on the X system, but at this point, increasing amounts of video. But I think where the X network is strongest is among people who think a lot and read a lot. You know, so that's where it's going to be strongest because we have words. and you know. So um, among readers, writers, and diggers, I think X is number one in the world.
As far as social media goes, the form factor, if you had to wager a guess for tomorrow,
Yeah.
how much is text, how much is video? I've heard you speak about maybe voice and hearing being the next form of communication with AI. What happens to X in its true form? How does it evolve?
Yeah, so I do think most interaction is going to be video in the future. Most interaction is going to be real-time video with AI. So real-time video comprehension, real-time video generation. That's going to be most of the load. And that's how it is for most of the internet right now. It's most of the internet is video. Text is a pretty small percentage, but the text tends to be higher value generally, or more. It's more densely compressed information. That's gonna be So, but if you say like, what is the most amount of bits generated and compute spent, it's certainly going to be video.
So I used to be a shareholder of X, a very small one.
Okay.
And I got paid when you bought Twitter and you made it X. Happy decision. Glad you did it.
Yeah, I think it was important. I felt like Twitter was heading in, or had gone in a direction that had sort of more of a negative influence on the world. It was. I mean, of course, this depends on one's perspective. Some people will say, well, actually, they liked the way it was, and now they don't like it. But I think the fundamental thing was that Twitter was amplifying, I would say, a pretty far left by most people's standards in the world's ideology, because where it was based in San Francisco. So, and then they actually suspended a lot of people on the right. So from their perspective, even someone in the center.
Hi, BB. Welcome to the
Right.
stream.
If you're far left, anyone in the center is far right, because it's just on the political spectrum. They're just as far left as you get in the United States and in San Francisco. So what I've tried to do is just restore it to be balanced and centrist. So there haven't been any left-wing voices that have been suspended or banned or de-amplified or anything like that. Now some of them have chosen to just go somewhere else. But at this point, it is the operating principle of the X system is to adhere to any country's laws, but not to put out them on the scale beyond the laws of a country.
When I think of social media, thank you. When I think of social media, Elon, I feel like even data suggests that the current incumbents seem to be losing traction amongst the youngest of audience.
Yeah.
Even platforms like Instagram, they're not exactly like Twitter, but platforms across the board. If one had to rework social media and build something bottom up, what do you think could work for the world of tomorrow?
Well, I don't think that much about social media, to be frank. It's I can mostly just want to have something where there's in the case of X, kind of a global town square where people can say what they want to say.
Guys, let's
with words.
see this interview after some time. Let's get into the video. Let's see this video, the billionaire blueprint for success.
Dit is waarom je een strandhotel boekt.
You have scaled from 300 million to 3 billion.
Most people don't know the story. I'll tell you the story.
They see the social media and they're like, oh, I don't know, do you actually do, business? And it's like, oh no, I'm only the, president of Real Brokerage, the fastest growing brokerage, that
been advocating gold and silver for some time. Probably gold and silver would take up 20-25% of the portfolio.
Right now?
Right now.
Wow.
This is something that we keep telling retail investors also who want to be good investors. Start by looking at the cash flows. Try and understand that. If you think India has to grow, our favorite segment where we would like to focus on would be wealth management companies. I think that's a segment which we believe will do very well.
So it looks like I have set up the right business.
Yeah.
True Alpha comes from
Okay. That's years. We believe
the upcoming 2026 year. Mr. Anirudh, thank you so much for coming on our show.
it's a pleasure. Thank you for having me.
So Anirudh, as we were speaking, when you were working, and you're currently working in PJM right now in the alternate investment space, which includes PMSs and AIFs.
Right.
But just a while back, you were working in the mutual fund space as well.
Right.
And you told that when you joined, the AUM that you were managing was almost 1,500 crores, which was in 2018.
Absolutely.
By the time you left, which is in 2023, the mutual fund division, it had already reached 22,000 crores.
Right.
So that's almost 15x growth of AUM, right, during your tenure.
Right.
So my first question is, what exactly did you do right in that period from 2018 to 2022, 23, when the money that you're managing became 15 times? Something you did right. What was it?
Sure. So, firstly, again, thank you for having me here. We've largely been focused through and throughout in our investment philosophy. We start off with, being very sure about what not to do. Once we are sure about what we don't do, it just eliminates a lot of mistakes. And that helps through and throughout cycles actually. So, what we do focus on, of course, growth. India is a growth story. It's a emerging economy, probably the place to be invested into the next 5-10 years, okay, if not longer. But what we also realize is during cycles, there are lots of bubbles which get created. If you can avoid making mistakes in a bubble, or during, if you can protect the downside, I think that is something which really stands out. I think 2018-19 initially we were just floating around doing reasonably okay. I think 2020, the COVID year, was very transformative for us because it was a bet where the markets had really corrected. Valuations were on your side. I think the rhetoric or the thought process in the market was things are only going to go down. We bet on the fact that the world will come back, and we accordingly built positions. We were reasonably conservative before that. We made the portfolios reasonably aggressive at that point of time. It is very difficult to buy into falls.
Yeah.
If you can do that, I think that's something that we did. We always as a team keep looking out for such falls. And that's where we went ahead, created a good strong portfolio based on cash flows. And I think so that fructified over the next 3 years.
Got it. So basically doubling down when the market corrected, when a lot of people were panicking and pulling out their money. Right. You bet on companies which had good cash flows and you knew that they were undervalued, so you invested in them.
Absolutely.
Now, one more thing, Anirudh, is what I have come to realize, that true alpha, which is basically outperformance with respect to the index, comes from an information arbitrage, meaning that you have figured out something before the rest of the market has done. Right. Because if everybody knows it, which means, for example, everybody knows AI is the next big thing. If everybody knows it, the whole world is going to put money into it and it's just going to go up. Right. But true wealth is not created like that. True wealth is created when you know something before the rest of the world, because the price has not been reflected based on that knowledge yet.
Sure.
So, based on that understanding, how exactly do you identify this information arbitrage in the market? Right? How do you sort of understand things about certain sectors or companies before it becomes common knowledge so that you can ride that up?
ट्रेडिंग में सबसे बड़ा प्रॉब्लम पता है क्या होता है? कैपिटल का शॉर्टेज. कभी स्टॉक पसंद आता है बट फंड्स कम होते हैं.
Sure. This is a brilliant question. Okay. Now let me put it this way. Information arbitrage might not sound right. Okay. But let me put it this way. Just pure, analysis of sectors and companies is what we do. I'll come to the point. See, what we like to do is
We like to buy into good businesses, and I'll define what is good businesses, which are going through tough times. Now, what are good businesses according to us? They have a history of cash flows. So they have generated cash flows through and throughout. Okay. So it is possible that the profits are depressed, but cash flows are still happening. Okay. This is one. Secondly, the balance sheets are reasonably clean. The good thing about corporate India is today the balance sheets generally are very clean. In terms of not having too much of debt. Okay, so that is the second thing that we look for in a good business: cash flows followed by good clean balance sheets, followed by good promoters. Okay, and there we do a lot of work. Once these three things get ticked off, we like to see such businesses which are going through tough times. So to give you some sense, today, if you ask me, okay, Anirudh, where is the space where you think businesses are going through tough times? I would say chemicals probably. Okay, I would say probably auto anchs. Okay, textiles went through its own phase when all the tariffs came through. So at that point of time, generally people are skeptical about such businesses. But if these businesses have proven good cash flows, clean balance sheets, and good promoters through and throughout the history, it becomes a very high probability event that if you invest in them today with a view over the next 3 years, you will make reasonable amount of money. At the bottom of a cycle, what happens is the prices are depressed, earnings are depressed, valuations are also, so people don't care about them. If you buy them then, the ROEs are also depressed, the return on equities. But if you buy them then, what all plays out in the next 3 years as the cycle turns, the earnings come through, you also get the second component which is important for return, which is PE expansions happen and ROEs start moving up.
Can you explain what is the PE expansion?
Sure. Okay. So returns generally, according to us, and this is our belief, the overall returns that a person makes or a stock gives, it has two components playing out there. One is there has to be earnings growth. Okay. So if the earnings grows from 15 rupees to 20 rupees for a company, accordingly the stocks will move up. Okay. But what happens is, let's say at 15 rupees, the stock is about 10 times. So the stock price is 150, right? Now when the 15 goes to 20, if it is out surprising people on the positive side, let's say the expectation is 18 and you deliver 20, okay? So what should ideally happen? The 20 should be into the, what was the P that we took at the first? 15 into 10, right? 150. So 20 into 10, it should be what the P should, the price should be 200. But people realize that the earnings have started accelerating. They will say that I am ready to give 12 P to this. So suddenly, what happens where 150 stock actually doesn't go to 200, it goes to 240. Because there are two components, earnings growth as well as a PE expansion playing out. The PE expansion happens from 10 to 12. And this could keep going on.
But why does PE expansion happen?
Because there are positive surprises which come through. The P compression happens because when there are negative surprises. Okay, that's a sentiment value that is being attached. Okay, when suddenly earnings start outperforming the expectation, there is a lot more money which chases such stock because the trajectory or the expectation of outperformance or the company to keep outperforming is very high, and hence people say, okay, why shouldn't I only stick myself to 10p? Let me go up to 12p because we believe this earnings which has come through of 20 might actually overshoot again into the next 2 quarters, 3 quarters, or 2 or 3 years. And that's why the PE expansions happen.
So basically, the speed at which it is growing, the earnings, that has surprised people.
Absolutely. It has to be a positive surprise for a PE expansion, and generally a negative surprise would see PE compressions happen.
So you said that you like to look at good cash flow companies in troubled sectors.
Troubled sector, or the company specifically might be going through some amount of a trouble or whatever.
You identify such companies, and how do you know by when they will turn around? Isn't that like a difficult thing to do?
So that is frankly what we get paid for. Okay. So we need to meet these companies.
Like if you had to tell your, let's say, your 10-year-old son, for example,
right.
How would you explain this? What do you do?
See, what we basically try and do is we do a lot of ground research. Okay. Me and my analyst. And I'm sure this is the thing that goes across different fund houses.
Okay.
You meet distributors, dealers. So how do we assess a company? You take the company around. First is, of course, we try and assess the promoters. Because we are minority shareholders, is his interest aligned to our interest or not? Okay. Once that is established, then we try and triangulate the company, keep the company in the sector, or the suppliers to the company.
Just one question
Yeah.
here. So when you meet the promoter, don't you think they're very good salespeople? How will you find out if they're lying?
So meeting the promoter is the last thing we do.
Okay.
Okay, that's a box tick off that happens, but that's the last thing we do. You're absolutely right. A promoter would generally not give you, without any bias, but they would probably give you a good picture about how things are, and the reality might be a little different from that, or very different from that.
Sure.
What we do is that is where the channel checks go through, and that is a channel check on both the company, and also it vindicates what the promoter has been saying, let's say on con calls or probably on earnings calls or the annual report. What is it saying?
So can you give an example of a company without naming it and tell us exactly what sort of groundwork you did for this company?
Sure.
To identify some kind of outperformance which other people have not seen.
Sure. So generally I'll take a sector like jewelry.
Okay.
Now jewelry is a sector where there is a lot of unorganized guys. Okay. And there are few large organized guys. So there was a time when there was an IPO for a small company based out of Gujarat. They were doing B2B work largely for the largest listed jewelry company in India.
Okay.
Now, when initially, frankly speaking, we didn't even want to meet them, but it was the persistence of the promoter. We said, okay, let's meet. Okay. We initially had slotted it for 1 hour. The meeting went on for 2.5 hours. Okay. Young gentleman, he was extremely confident and very convincing. Now that was we started meeting the promoter. Then we said, okay, let's do the channel checks. So we started doing our channel checks with the jewelry company for which he supplied. And he minded supplies B2B to probably four of India's largest. Okay. So when we spoke to some of these companies, they spoke extremely highly about this syndrome. Okay. So that was the first vindication where these branded guys who are so well respected speak so well about a very, very small company coming out for an IPO of 500-600 crores market cap. Okay. So that was the first check. The second check was walking into their store in Ahmedabad to figure out what they do. Without announcing us, me and my analysts, we were going down there, they wouldn't bifurcate their bills. So every bill was, if it is above 2 lakhs, you have to name your PAN, you have to give your PAN card. You want to see whether, there are shortcuts out there. No. So some of those checks and balances, then how they're designed. Their designing is what actually made them go very well with some of these larger brands. We've checked out the full team sitting out there, and very convincing guys. New jewelry. In fact, the largest jewelry company, lot of the female population wouldn't go to them for marriage jewelry, etc. That actually turned in the last 4-5 years, largely because of them outsourcing it to some of these guys. And those were some of the checks and balances. Then you checked, even within our society or etc. Do you actually end up buying jewelry from these brands? And the answer was yes. So those were some of the checks and balances. Of course, we have got chartered accountants, CFAs sitting in the team, running through all the numbers that are required. We also finally have the liberty of getting a forensic audit done if required, where we like the business but are not sure about everything, where we want to be extremely sure. We will go ahead and get a forensic done. This is where probably we differentiate, where a retail guy wouldn't have that access. But that is the access as an organization or an institute we bring to the table.
Man, this is like super detailed kind of research where you go into the ground level, meet the promoter, meet their distributors, go to their factory, ask questions to the employees.
Absolutely.
So much of research.
Absolutely.
That's very in depth. I didn't know it was like so much of work. I thought you just look at the P&L and then that you go and invest, right? Because that's what retail investors can do to the greater extent. We are limited to the financial reports.
See, so our view is when we look at numbers, let's say, forget everything else. Even when we look at numbers, and this is something that we keep telling retail investors also who want to be good investors, start by looking at the cash flow statement. Try and understand that. Once you understand the cash flow So, chart accountants, CFAs, someone from BCom, he is taught to first draw the balance P&L, then the balance sheet, then the cash flow. But when you're evaluating a company, go exactly the opposite way. Evaluate the cash flows. The cash flow statements gives you enough story about what is actually happening. Then you go to the balance sheet, and then finally look at growth on the P&L. Okay, if a company ticks off the cash flows and the balance sheets, then looking at the P&L makes a lot of sense. If the cash flows itself are dicey, or the balance sheet is not strong enough, what our belief is, it doesn't make sense to go to the P&L.
So that's the process you follow.
Yes.
Start with the cash flows, then the balance sheet, and then the P&L.
Absolutely. So that's what I said at the starting. We try and avoid mistakes as far as possible, and this is a part of it.
So let's come back to India for a second. So you mentioned that you like to look at companies and sectors which are not doing well. So right now, if I evaluate the Indian stock market, what are those sectors which are going through a tough time?
This is a very good question again. So if I have to look at businesses which haven't done well, okay, to give you some segments, subsectors also, I'll come to some interesting subsectors also. One reasonably good sector which hasn't done well but has invested heavily over the last 3-4 years and should and hopefully the numbers fructify is chemicals and agrochemicals. Agrochemicals, especially in the last 3 years, have gone through tough times. We believe the next year should be reasonably good for them. It was actually getting good. Unfortunately, the monsoons have been very erratic, and hence the demand got depressed to a certain extent. But we believe that cycle is coming back, where agrochemicals and chemicals both should start doing well. And this is also vindicated by the fact that if you look at China's 4-year policy that came through, they clearly mentioned they don't want to grow commodity or focus on invest in